Hello, everybody. Firstly, I'd just like to welcome you to this webinar where we'll be talking about the US dollar and the most important events, the non-farm payrolls and the opportunities its publication will present. My name is Sasha and I'm a financial analyst from the research department at Fortrade. Delighted to have you with us. If you have any questions, please call us and ask to speak to a senior account manager who'll be happy to help. Before I go any further, please take a moment to read our risk warning and disclaimer. I'm sure you know that although gains can be made trading CFD, losses can be incurred too, and you need to be aware of this. And now let me explain what a market opportunity is if you don't know. A market opportunity is a one-page briefing containing market analysis, and our goal is to provide you with a simple-to-understand opportunity to trade in the markets. We will select an instrument such as gold or a currency pair and tell you our very best estimate on its price direction so that you can trade on it if you want to. Market opportunities are produced by the research department on a daily basis according to market conditions. Market opportunity consists of fundamental analysis, geopolitical events, and technical analysis that includes a pivot point and support and resistance levels. It's important to understand it's your decision whether you want to trade on market opportunities or not. So here's an example of a market opportunity. You can see some fundamental analysis on what's going on with the euro-dollar currency pair. You can see that this is a downtrend opportunity over a weekly period, since our analysis suggests the euro would decline in value against the dollar. At the top, you can see some geopolitical events and fundamental analysis that can influence the euro-US dollar currency pair. For example, the part on the EU and its disagreement, the Italian government over its budget, which has put pressure on the euro. When using a market opportunity, it's vital to look at the pivot point on which the calculations are based. In this instance, if the price reaches 1.1381 that you can see on the right-hand side of the screen, you can see the right moment in our estimation for opening a trading position. That's how you decided to trade on this market opportunity when it was active. You can see below the trend direction and the time period. It's also important that you know how to use the stop loss and take profit options. You have support resistance levels further along. At these points, you can put a stop loss and take profit, and further down, you have calculations. If you close the position using take profit, you can expect these kinds of profits at the support levels in green. If the price is going against you, then you could potentially have a loss of this amount at the resistance levels marked in red. Finally, profit and loss calculations are based on a one-lot trading volume. The NFP, like all major economic events, is of importance, but when there is a market-moving or sentiment-creating event such as the coronavirus and its economic impact, data from the NFP takes on a different significance. It's not so much the headline NFP number that people look to, because obviously in this market, no jobs are going to be added. The greater focus will be on the official unemployment rate, which I will come back to shortly. The non-farm payrolls report is the release of official data on US jobs growth over the previous month. The headline number in the report is a number of jobs that the US economy has gained or lost over the previous month. A more important number for the markets, however, is the difference between the change and the consensus of estimates by analysts and economists published in advance. Over the past few years, non-farm payroll data has been very positive. Last month's figures, though, were worse than expectations, as I will explain in a moment. As you can see, the unemployment rate has significantly improved in recent years. The unemployment rate fell 3.5%, equaling its lowest level since 1969. But, as you can see, last month the impact of the coronavirus was felt and saw unemployment jumping to 4.4%. You can see that on the right-hand side of the graph there. The NFP release comes together with the unemployment rate indicator on the first Friday of every month. When the actual number differs from the forecasted one, the market moves. Generally, a lower unemployment rate is better for the economy as jobs are created. But right in the midst of the coronavirus, with unemployment rising and the world economy entering a recession and interest rates already at record lows, it looks like the Fed won't be changing rates at any time this year. So the previous NFP report, the non-farm payrolls released on April the 3rd, 2020, showed that the US economy lost 701,000 jobs in March. That was much worse than the expected 100,000 jobs loss. The jobless rate jumped to 4.4%, worse than expected, as the economic impact of the coronavirus began to be felt. But bear in mind that the coronavirus had not fully impacted the unemployment rate at this point. Investors will be paying special attention to unemployment figures this month. Following the results, the dollar grew slightly against a basket of other currencies. Although the NFP figures were much worse than expected, traders were in a sense relieved that they were not worse still. Investors were also unsatisfied, since it's clear that unemployment and not potential job creation or lost jobs is the main market issue in a coronavirus hit economy, where millions of people are losing their jobs. You can see the euro dollar here. After the results were announced, we can see the euro dollar moved higher and continued the trend in the following days. The thing to keep in mind is that the dollar is often volatile on the day of the NFP, but that the NFP can also represent a good trading opportunity. But what can we expect this month? So both the NFP and unemployment rate figures are being heavily affected by the coronavirus. Millions of Americans are losing their jobs due to the lack of demand in the economy, as big parts of the US economy remain closed and people are still under lockdown. In the absence of official monthly statistics on the unemployment rate, traders watch every Thursday's jobless claims data, and just over the past 6 weeks, a total of 26 million people have lost their jobs. This will have an additional impact upon demand, because once the US economy reopens, many of these millions will likely remain unemployed. And with no regular income coming in, those people are unlikely to want to spend money, meaning that the US economy could remain weak for a number of months. This month, the NFP is taking place on Friday, May the 8th, and analysts expect 21.853 million jobs to be lost this month, and for the unemployment rate to skyrocket to 16%. If analyst predictions are correct, this would be the worst unemployment figures since 1939, and that number is likely to rise still further next month. Higher unemployment levels and NFP job losses historically weaken the US dollar, so worse than expected figures would be expected to confirm this trend. However, the US dollar is also being used as a safe haven by investors needing cash at their fingertips, so this should be considered when trading. As far as gold is concerned, the precious metal is being supported by very low or near zero interest rates and by investors looking for a safe haven. So worse than expected figures could underpin the metal. In any case, this month's NFP and unemployment rate figures are going to be historically significant and are likely to move the markets and give investors major clues on just how deep the impact of the coronavirus is going to be on the US economy. Of course, at ForeTrade, we'll be following any developments that affect the markets very closely, especially those to do with the coronavirus. So please do get in touch with a senior account manager. If you have any questions or want to take advantage of the trading opportunities that the NFP will present. Until next time, goodbye, and please join us again at ForeTrade soon.